breakdown on Alibaba stock, a little bit about the fundamentals, a little bit about the technicals. They got their upcoming quarterly report coming out, so now's a good time to stay tuned. So, first and foremost, we can get into the analyst tab here on Yahoo Finance and just give a little summary, a quick little summary here about what's to expect this quarter. So, from revenue, we're looking at 243.76 billion, which is a year-over-year growth of 4.33. So pretty modest, nothing crazy there with that growth rate. But if you look at next quarter, we're looking at 5.19. For the year, we're looking at 6.31. And next year, we're looking at 8.24. So you can see that we do have an acceleration here. Now, 4.33 on the surface is not very exciting, relatively low, but it's the acceleration that you need to pay attention to. And anytime you see a acceleration or reacceleration in growth, that's a very interesting opportunity that you should really pay attention to. So that's for the growth rate here. If we look at another thing that's kind of interesting with the financials is, Alibaba has been a very controversial stock the last 5 years. It's kind of been tossed aside by a lot of Wall Street, not a lot of retail interest as well. And a lot of that had to do with just the fact that the stock was down only. It was down only for a couple years. It's just people were losing money like you would not believe. However, in the meantime, though, the stock is still down. I'm close to 70% from its all-time high back in the day. But that's very interesting because if you look at the fundamentals, you would not expect the stock to be down as much as it is. Because if we look at trailing 12-month revenue, we've got a 996 here. This is in Chinese currency, so we got 996. And 2022, you had 853. So 3 years have gone by, and look, the revenue is growing. The stock price is down massively, but trailing 12 months, the last 12 months has been record revenue for the company. So they are posting record revenue as we speak, but the stock price is still in the gutter. Now, you can see every year from 2022, 853, 868, 941, 996, right? This is a company that is growing despite the fact that the stock price has not performed very well, but the fundamentals have been performing. And that's something that is very important. If you are a long-term, value type investor, this is what you want to see. You want to see a disconnect from the fundamentals in the stock price. So anytime you have a situation where fundamentals are doing good, but the stock price is doing bad, that is a cause for you to pay attention. So we can look at the same thing here with operating income. You can see here, same thing. Operating income growing year over year, despite the fact that the stock has not performed very well. Net income, it's going up. EPS, it's going up, right? So the big picture fundamentals here are actually quite strong. So you have a company that is growing. You have a company that's becoming more profitable. You have a company that's buying back shares. But you have a company that stock price has not reflected that. Now, if we look at the PE ratio, we're looking at a 15.9 right now, which is extremely low. That's a very low PE, especially for a company that's expected to grow at about 9% next year. You're really getting quite a bargain here if they continue on the path that they are on. Now, if we were to switch over to, I guess, the technicals now, it kind of paints an interesting picture, I would say. So again, you had the stock price peak out here in 2020 at $322 a share, and then you basically saw down only, right? You saw a stock price at no direction but down for 2 years straight. And we bottomed here October 2022, down about 82% from its all-time high. That is a nasty drop, a nasty drop, despite the fact that revenue was growing. You did have a couple bad years in there with, EPS, right, with the CCP related fines. You had a deceleration in the growth rate. I mean, back during this time, I mean, the growth rate was chugging along. They were growing at like 25%, 30%. And then the regulatory crackdown happened here, and that basically snuffed out the growth, right? Because they were growing from, I believe, around like 20, 30% in here. And the regulatory crackdown, the pandemic brought that strong growth rate pretty much down to zero. Okay, and that's why the stock was down 8%, but it did not go negative. So revenue did continue to grow during this period. But the great thing about buying the stock right now is because it already went down, right? You had the 2 years of sell pressure, but now you can clearly see that the stock no longer has sell pressure. So you're buying right now into a company that has strong fundamentals, low valuation, free cash flow, share buybacks, and on top of that, a uptrend is just starting to emerge for the first time in a few years. So we are in an uptrend for the first time, like a confirmed uptrend for the first time since kind of this little period back here, which was 2019, where we kind of had an uptrend from like 2018 really to 2020. You had this 2 year long uptrend and then a 2 year long downtrend. And then you had a consolidation phase here, like an accumulation phase. And now you can see that we are forming a new uptrend. And you kind of had, you had the retest here of this level, which failed, but it put in a higher low, right? It put in a higher low. Then you had another surge here, taking out this top. And then you had a higher low formed. Tried to retest, but it failed. And now it's kind of sitting on here, about to put in another higher low. Now, if we get stronger earnings this week, I fully expect this little peak to be taken out, this local top here. I expect it to be taken out. Maybe not a day after earnings, but over the next, let's say a few weeks or a month or so, it could very easily take out this top. And if it does that, then, the new bull market is pretty much confirmed, in my opinion. But again, like the great thing about buying Baba stock right now is you have revenue growth, you have earnings growth, but most importantly, you have a stock that does not have a hype premium. You have strong fundamentals, accelerating fundamentals, but no hype premium. And you're also very early to this uptrend, right? If this goes on to just go way up here to take to challenge all-time highs, you are very early right now. Because despite the fact that we are in a bit of a uptrend right now, you're still getting it for what it was trading at 3 years ago. So you are early. So you have an opportunity right now to be early to a company that could really go on to do extremely well over the next 5-10 years, right? Because you're investing into China, which is a very, very large economy. It's a growing economy. It's had some challenges the last few years, but I fully expect those challenges to largely be in the rear view mirror. And to be able to buy like their legacy companies, their mega cap companies at this kind of valuation truly could shape out to be a generational opportunity. I really don't know if you're going to see China this cheap again. Now, of course, it was a little bit cheaper back here, but arguably now is a better time to buy because you do have that uptrend established, right? The fundamentals have bottomed out. The sell pressure has bottomed out. You're buying in a great time here because still super low valuation. It's just starting to break out. It does not have a high premium. Now's a great time to buy this stock. Now, I'm not saying it's going to go to $1,000 a share overnight, but if you are sort of a value oriented investor, I think that it does have a place in your portfolio, especially if you want to try to get exposure to other markets that are not the part of the U.S., right? Because obviously the U.S. market is, arguably pretty overextended in terms of valuation. We've seen a big surge with AI, and that's another thing. Like, that's a whole different topic for this video, which is, Alibaba is an AI company, right? It is truly like a sleeper AI company. If you look at cloud related services, right, they're AI related cloud service is growing at triple digits, right? AI is exploding with this company, and there's really not a better play in China for AI other than Alibaba, right? Alibaba is realistically like the leader of AI in China, which is very strange because nobody talks about it, right? I mean, last quarter, AI related services, that business grew at triple digits. You have cloud um, re-accelerating in growth up in the 20s now. That was a business that looked kind of dead a year ago. Like a year and a half ago, cloud was basically treading water. But now with the growth in AI globally, that's getting up to 25%, right? The economy is beginning to expand again in China. And by buying in now, you're getting in early. You're getting in early. Consolidation phase is ending or ended. Valuation is still low. Things are looking good. So, like going into this quarter, what you really want to look at is you want to see further acceleration in the cloud business. You want to see a further acceleration in the AI business. And also, when it comes to core commerce, Taobao, Tmall, what you want to see is again an acceleration. It's all about acceleration right now. Um, and that's kind of been the trend the last couple of quarters. We're seeing acceleration, but we want to see a continuation of that acceleration because the growth rate, especially for their legacy business, which is Taobao and Tmall, that's a business that's been pretty dead the last few years, right? The CCP and also other related issues within China, especially with competition from JD and PDD, for example, really damaged that business in the short term. But they're starting to see it revive a little bit. So, if core commerce can get back to growth, if we can start seeing like double digit growth out of core commerce, just get it up to 10, 12, 13, 14%. And this stock is going much, much higher. And then we want to see further acceleration in cloud. And then, of course, you have their overseas business. You have international commerce, which has been growing quite strong, but it isn't profitable. Now, if they can get that business to profitability or break even, that's also good. So you want to see that business trending in that direction. You want to see international commerce get to break even. That would be a big goal right now. If you're an investor, right? Very positive for the company. You want to see a acceleration, a continuation of the acceleration in the cloud business. And you also want to see a little bit of a pickup in core commerce, right? Like I said, ideally core commerce can get back up to double digit growth, like low double digit, 10, 12, 13%. If that can happen, this stock is going much higher. And the great thing about it is there's just not a lot of downside. There's really not a lot of downside right now because the stock has been beaten down now for several years. The valuation is low. They're buying back shares. It's free cash flow positive, right? It's just from that like margin of safety standpoint, there's not a lot of downside. I think the risk to reward is very much skewed in terms of reward right now. I don't think you're taking a lot of risk buying at these levels. Yeah, you could have bought a year ago when it was cheaper, but regardless, it's tough to catch a bottom. I'd rather buy in a confirmed uptrend than trying to pick a bottom. But yeah, anyways, those are my thoughts about Alibaba stock going into this quarter. If you have any questions, hit me in the comment section. All right, guys, thank you.